Okay, well, we've got to talk about gold. Okay, I just need to show you this chart. Okay, look at this chart. Let me just refresh this. I'm going to refresh this live. This is how much gold is trading for right now: $4,256 a troy ounce. This is insane. Like, we've never seen gold this high. And if you go back just a year to October 21st, and well, October 21st, right here, where is it? Right there. Gold was at 2742, so $2,742. So how we go from there to $4,255 a troy ounce? That's what I want to talk about in this video. And if you are the type of person that want to invest in gold, put your money into a safe haven, then we're also going to talk through that as well. All right. Now, before we carry on, I have a question for you, and it's a serious question. Would you like to own Rolls Royce? And I don't mean the car, because obviously that would be very, very nice. But if your answer to that question is, yeah, Pete, that would be amazing, thank you very much, then I have to mention today's sponsor, XTB. Now, they are giving away to new customers one free share in Rolls Royce. Here's how you can claim yours in 3 simple steps. So, step number 1, head over to XTB and register for a free account. Step number 2, when you're registering for this account, make sure that you accept the terms and conditions to take part in this free share offering. Step number 3, deposit some money into your XTB account and make sure that your account is fully verified. Once you've done this, and within 3 business days of your deposit clearing, you will then be credited with 1 free share in Rolls Royce. Now, just to let you know, they recently ran a similar campaign where they gave away a free share in Uber. That ran out in 4 days. This is limited availability. It is first come, first served. I will literally put a link in the description and in the comment section for you to start the process and get a free share. I have my fingers crossed for you, and let me know how you get on in a future video in the comment section down below. Now, in order to understand the how of all of this, I think we need to refer ourselves to this article right here. And it says here in the first paragraph, as economic uncertainty deepens, the rush for gold continues, with the price of the precious metal this week topping $4,300 for the first time. Now, this was published on October 17th, so just under a week ago now. And it says here in the second paragraph that I've colored in yellow here, the gold sales can rise sharply when anxious investors seek a safe haven for their money. It says here for the US, the latest gains arrive amid the now weeks long government shutdown and ongoing trade wars abroad, with Donald Trump most recently threatening to place much higher tariffs on China before appearing to walk back those potential new levies as unsustainable. Still, his barrage of other import taxes has already strained economies worldwide. Meanwhile, the prospect of lower interest rates is also making gold a more attractive investment. Now, there's a couple of things in that section of the article. I think if you zoom out to the UK specifically, I don't think we're in a low interest rate environment, especially not compared to where we were before. I think because our inflation rate is still high, we're in an environment where interest rates are still relatively high. You can get inflation beating rates on the high street in the fours, which I think is good for savers, not so good for borrowers. We've spoken about this a number of times on the channel. But I think for where we are right now, we're not in a low interest rate environment. Other things mentioned in that paragraph there around the government shutdown in America. I think this is day 19 right now. They're still shut down. If I'm not wrong, this is the longest they've been shut down in history, because they can't agree a new budget for the next tax year, the next fiscal year coming up. I mean, it's absolutely crazy. Then, obviously, you need to acknowledge Russia, Ukraine, Israel, and Gaza. I mean, Israel, as of today, are back bombarding the Gaza Strip as we're recording this video. So there's a lot of uncertainty. You look at the UK, our OBR forecast, our economy. Germany's kind of in the same boat as well. They're being told that they need to cut certain things in order to look at the longevity of their economy. We're in a bit of a mess globally. So the idea that gold is this safe haven, a place to pop your money where it's relatively safe, it makes sense. The question is, how do you actually go about doing this? Now, before we jump into the how, I just want to give you a very, very brief overview of how gold is a safe haven, if you want to call it that. We're just going to use a scribe for this, by the way. Okay. So if you think about gold as a commodity, because that's essentially what it is. And by the way, it's finite in nature, meaning we don't have an unlimited supply of this thing. It means that it holds value quite well. And when you think about gold in comparison to other things, other asset classes where you might put your money, this gold as a valuable asset compared to, let's just say, stocks, equities, stocks and shares. I mean, those three are exactly the same. They're just different terms for the same thing. Then you've got bonds. I would also put maybe property in here as well. Those are three asset classes that we have that are commonly known. This is generally speaking where you tend to get most of your growth when you're investing. And with that upside, that potential upside, you also get the potential downside. So you've got the volatility in the markets, right? But typically speaking, for most investment portfolios, this is where you're going to make the most amount of money in your stocks, your equities, your stocks and shares. Then you've got bonds. They will come in two flavors. You've either got company bonds, corporate bonds, or you've got government bonds where you're lending money to a government. Typically, these are relatively safe because government, well, the UK, America, they don't tend to default on their debts. So safe. If you think about, El Salvador or something like that, then maybe not so. But in the modern world, in our Western economies, bonds, government bonds are pretty safe. You have corporate bonds, which would be for companies, Tesco's, Sainsbury's, Apple. But with a bond, it's essentially an IOU. You get your capital back with some interest. And you kind of know what that is going to be right from the outset. Then you've got property. Property is property, is bricks and mortar, it's physical, you can touch it. It's why people love it so much, right? So these are three asset classes. Now, all of them still carry risk because whilst you do have a default risk here, probably not on the government side, but on the corporate side in bonds, you definitely have a risk in the equity side for sure. And you have a risk in property because it's still subject to property market fluctuations, right? So gold, comparison to all of these, is most definitely regarded as a safe haven for your money. But that does not mean that you can't see fluctuations in the gold price either. Now, typically, when people go and buy gold, people have choices. They can either go and invest in companies that get the gold out of the earth, okay? Or you can go and invest in physical gold. I know a lot of people who prefer to have physical gold as an investment. I'm going to show you how you actually do that in a moment with XTB, who we're partnering with for this video. Now, I'm going to go over here actually because we have done some work with XTB over the past couple of years and they've grown quite significantly over the past couple of years as well. They offer an investing suite now, which encompasses individual stocks and ETFs. We're going to go through how you can access gold via their ETF functions. But I just thought I'd, highlight this to you as well. They are currently charging 0% commission on ETFs, which isn't what everybody does in the space. And if I go all the way down here, you're going to see the comparison. So if you look at them in comparison to their competitors, so the likes of IG, Hargreaves Lansdown, you've got Interactive Investor here, you've got Free Trade. What you'll see there is that they have zero commission per deal, whereas the others do charge, apart from IG in that instance right there. Um, this is a really, really big one. This right here. If you use them, and let's just say you deposit £500 with them and you invest 250 into whatever it is that you choose, the remaining £250 that is not invested, that's sat in cash, will generate 4.25%. And I believe that is the highest rate that any provider is currently offering on the market right now. So if you're looking to kind of put money somewhere, but you're kind of unsure as to where you want to invest it and you want your money working for you, whilst your money is waiting, you're waiting to make a decision, this right here is a really, really good option potentially for you. They don't charge any account or custody fees compared to the others. And they have the lowest FX conversion fee, which is normal if you're buying sort of a USD ETF, for example, you're buying in pounds, you're going to have the exchange fee. But as you would see, the conversion fee, sorry, is much, much lower than competitors as well. So, you know, XTB on that front are really, really good. And this is something that I know that they worked on over the past couple of years. If you go down here, you've got 1,800 ETFs that you can now action and actually choose from. And I'm going to come back to that in a moment, but I do want to highlight one really, really important thing that they've literally just launched. And it's right down at the bottom. They didn't have this the last time I worked with them. This was their ISA, and this is their flexible ISA. So let me just explain how a flexible ISA works, because let's just go back onto the scribe here, okay? So as you know, you have £20,000 you can save into an ISA every single tax year, right? Now let's play a hypothetical scenario here. Let's just say you are lucky enough, you have the full 20K. You whack this in to the account on April the 7th, 2025, so this year, right? So you've maxed out your ISA allowance. But let's just say in August this year, you're like, I need some money. I haven't got anywhere else I can pull this from. I need 5K. Now, with a flexible ISA, you can take 5K from this. So you can draw it back out. I should probably do the arrow the opposite way, right? So you can have that come out of your ISA. Now, this is obviously going to reduce your balance to 15K, right? Transaction done. You're allowed to make the withdrawal. But under the ISA rules before flexible ISA became a thing, that £5,000 you could not pay back into your ISA. So you could never replenish that £5,000 that you took out back into the ISA. Whereas with a flexible ISA, you can. So let's just say we get to, like, I don't know, where are we at now? October 2025. You're like, oh, I've got 5K now. I want to put that back into the account. You can now do that under a flexible ISA, taking your balance from 15 back to the 20 that you originally had. And that's a really powerful thing in terms of flexibility and you having choice around use of your ISA money. And again, just to stress this as well, in your ISA account, let's say you max it out, well, I don't know, you put £10,000 in there, £7,000, whatever it might be. If £5,000 of it is invested, you got £5,000 or £2,000 left over. Your £5,000 or £2,000 that is not invested, sat in cash, will get 4.25% as well. That's really, really worthwhile, just bearing in mind as an additional perk for you, as already mentioned. If we go back to the ETF section, as you can see, there's 1,800 ETFs that you can choose from. But we're talking about gold here. So let's say you're looking at gold, okay? You pop gold in here. This will then filter the ETFs. You're going to go into ETFs here. There are 10 altogether. Now, this one right here gives you the ability to invest in an ETF for gold mining companies. Okay, these are the companies that get gold out of the ground. They set wholesale retail prices, right? So you can definitely invest in those. But if you want physical gold, all you need to then do is you put physical gold in here. It will also just filter to these options as well that allow you to buy something that is connected to physical gold specifically. Now, the beauty of this is it's called a ETC, which is an exchange traded commodity, which means it's easy for you to buy, it's easy for you to sell. So, unlike where if you wanted to go buy physical gold down on the high street, you have to physically take your cash there or use your card and actually walk around with physical gold and then worry about storing it. And then when you want to go sell it, transporting it back, you don't have to do that. This is a product that is attached to the physical price of gold, and it means that you can just buy and sell as long as the exchange is open. So you can use XTB for that function specifically, which I think is really nice and convenient if you're the kind of person that doesn't have the physical time to go off and go get the physical thing. You don't have to worry about storage either. Now, I do think there is something that is worthwhile talking about. And this is maybe a question for you. Do you think gold can go any higher than it is right now? Because, like I said, let me just refresh my page quickly and just show you again. So it's actually gone up since since the first time we looked at it at the beginning of this video. It's now trading at $4,260. Okay, you just saw it change right there. How high do you think gold can go? Because yes, it is a finite resource, but the reality is, if you go and put money into gold right now, the price can retrace it might fall again. And that means that all the while it is a safe haven, it is so still subject to volatility and market demand, if you will. I mean, the price is driven by people's want to buy gold. And if people feel as though, okay, maybe things have calmed down a little bit now, I need to take my money out of gold because, like I've already said, you're going to get typically the best chance of growing your money in things like equities and stocks, then you could see gold come down. So, whilst it's a safe haven and it's deemed to be a safe product, it's still subject to market fluctuations and you could potentially still lose money, really, unless you buy it physical and you hold it long, long, long term. And if you're holding this thing long term, completely different thing. So it's all about your approach. But what do you think? Do you think gold could go to 4,500 and beyond? Let me know in the comment section down below. Hope you found this video useful. I'll catch you tomorrow. Cheers.